Bitcoin is back above 70,000 US dollars. The oil price drops immediately after the US has somewhat backed down and is now allowing the import of Russian gas and oil again because they've realized that things are getting pretty serious and that Trump isn't really making any progress this way. As a result, Bitcoin rises at first after, as mentioned, oil prices have fallen. The rest of the market is relatively stable. There are a few other topics that are now slowly coming to the forefront. Not just the issue of the Iran war, but also private credit and, of course, inflation. And with that, welcome to a new crypto update video. Yes, in my opinion, the markets are still completely tense. Yesterday, during the live stream, we already talked extensively and in detail about all these topics. The trading volume is still terrible. The markets are pretty tense. The topic of carry trade is slowly picking up again now as the dollar is losing a bit of ground. The yen is rising, oil is dropping a bit, government bonds are climbing to nearly 4%, while the 2-year and 5-year bonds are almost at par, which is not a good sign. Things are really starting to boil over. The question is, either things will really start to calm down now, then we'll see a bit of peace over there in the Middle East, or the whole issue is simply now completely doomed to fail. And it's just going to get even worse. And then we'll really be in deep trouble. With an energy crisis, inflation, and everything that comes with it, we'll definitely take a look at all of this, everything that's important for the chart. Before we get started, as always, feel free to give the video a like, subscribe to the channel if you haven't already, and of course, join the free Telegram talk and Signal group. There you'll always get the latest info. If I make any trades, if we take profits or anything else, you can check it all out there. The link for that is free and can be found below in the video description. So let's get started. So as I said, Bitcoin is at 70,400 US dollars. The markets, or if we take a quick look at the news, stocks diverge heading into the weekend, oil retreats. Equity markets turn choppy heading into the weekend, while oil prices cooled as investors wait. Efforts by the US and Israel to ease concerns over the Iran war. Yes, Israel also made a statement yesterday and said, well, for now we don't want to carry out any more attacks on energy infrastructure. Let's see how long that really lasts, because as I said, things are already heating up anyway. Oil and gas prices keep rising. Yesterday in the EU, or I think it was EU gas, it shot up by 30%. So where else do we have this? Right, the ECB is keeping its interest rates unchanged for now. At the same time, though, the ECB is also issuing a warning, and you really need to let this sink in. The ECB sees inflation possibly reaching 6.3% in 2027. Of course, under certain scenarios. So the longer the Strait of Hormuz remains closed, the longer oil prices keep rising, the more problems there will be and the higher inflation will climb. It is already expected that at least 2 to 3 rate hikes will still take place this year. Because of inflation, this is an issue that has been known for a while now. And to be honest, that didn't really surprise me. So 6.3%, yes, but that interest rates are being raised. Not necessarily because we've been talking about this on the channel for weeks now. At the same time, if we take a quick look at government bonds, you'll really see the problem. The government bonds look like a bigger shitcoin. I told you, for me, after the Fed's interest rate decision, we should be heading up toward the 4% mark. Yes, I expected it would take a week or two for all of this to be priced in, but just look at this. In less than 24 hours, we saw this move upward. At the same time, the 5-year government bonds were briefly at 4.153 yesterday as well. And we're already pretty much at par when it comes to the 2-year and 5-year bonds. That's not a good sign. At the same time, the 20-year government bonds are now at 4.9, 3.8%, while the 30-year bonds are at 4.8%. That means the 20-year government bonds are more expensive than the 30-year government bonds. You can already see from that something is going on right now, or the risk of investing in the USA at the moment is fucking high, really fucking high right now. And of course, we're seeing the same thing happening in Japan. Their government bonds are also rising in the end, higher and higher continuously. Not a good sign for any economy. Then yesterday, JP Morgan came out, or rather not just JP Morgan, but also Goldman Sachs and Bank of America. But Bank of America, on the other hand, only said that they would like to short the European private credit sector. And that's exactly what they did straight away. And JP Morgan and Goldman Sachs thought, why not just short everything? Sounds like fun. Come on, you can now even short our own products, our own private credit products. Have fun. Doesn't sound at all like the Big Short 2.0 or something like that. So first, the concerns about private credit keep getting bigger. Now, products are being launched by or with the 3 biggest banks in the US who are now saying, hey, hedge funds, do you feel like shorting this somehow? Do you feel like it, since things are getting shaky, are you up for it? Do you want to make a bit of money? That's how the game works right now. That was a headline yesterday where I thought, what the fuck? Fuck. But all right, let's wait and see. Otherwise, now we have to see what else happens. So nothing has changed. The war is still ongoing. Bitcoin is relatively stable. It has held above the 69,000 US dollar mark for now, or rather stabilized. If we look at the economic calendar today, we actually see nothing at all. So nada, not much is really happening today. So the economic calendar is empty, nothing is happening. That means we can head into the nice weekend without any worries. If only it were that simple right now. Let's take a quick look at the spot order book. You can see there too, the volume has just disappeared again. Just a few days ago, it was being praised. Now the market is simply right back where it was last week, namely in no man's land. Not a good sign. The funding rates, they're already rising again. Let's take a quick look at the heat map as well. It's also relatively empty. So most of it has now been cleared out. We still have a larger chunk at 66K and then the usual at 60 and 55K. Other than that, that's it. That means the market still seems pretty news driven. We just have to get used to that for now because, as I said, we can forget about interest rate cuts. On the contrary, the likelihood of interest rate hikes is getting higher and higher. To me, it still just looks like down. I know you're tired of hearing it, but what more can I say? The markets don't look healthy. Further sell-offs wouldn't surprise me at all, especially now over the weekend, maybe down to 66,000 or 65,000 US dollars. The next blue box down here, that would be the next support level we could keep an eye on. But otherwise, I just don't see anything that should push us upward right now. Let's move on to the altcoins. Ethereum, same story, has fallen below support again. Not really smart or cool. Solana, yeah, this yellow line, I know I'm kind of getting flashbacks from up here. It just really reminds me of that. Same story, no volume, rising prices, not really good. Let's quickly take another look at Tau because there's actually something has happened there again. So 5 should probably be possible here now. We talked about it on the stream yesterday that I would probably only start thinking about a short around 7 at the golden pocket up to 288. We even shot a bit higher, now have a higher high depending on how we close up here. The 300 mark was hit, and with that, in my opinion, the 5 is now in for the time being. We still have a bit of potential to the upside, but for me, the momentum is gone. Now, there should first be a nice ABC correction to the downside to follow. That's it for the altcoins. If you want to trade all of this, whether it's Bitcoin, stocks, or anything else, you can do it all with my partner, Exchange BingX. You still have 27 days to try out the VIP 2 pass. There are lower fees, and you get a few extra bonuses, I'll just say that. And then, of course, for certain tasks, for example, if you deposit 100 USDT, you'll get a 30 USDT bonus voucher. So that's 30% of what you deposited, which you'll receive as a bonus voucher. That's actually pretty cool. So feel free to check it out. You'll find the link below in the video description or in the comment section. The offer is still valid for 27 days for everyone who is not yet on Binx, or for those who still want to create an account on Binx. Let's move over to the Forex markets. So after the nice rally following the Fed rate decision, the dollar dropped again yesterday, which of course is also due to the yen, the first, let's say, mixed feelings. Concerns about carry trades came up yesterday after the yen rose so sharply. And Japan's Prime Minister Takashi is currently in the US. We need a higher high. Only then will I see some confirmation that, okay, the carry trade might slowly start to unwind. Otherwise, still keep an eye on the dollar. And what I'm also considering is the US dollar against the Swiss franc. Maybe to short it at some point during the day today. I'll announce it again in the group, or rather in the Telegram group, if it actually happens. Right now, nothing has been done yet. Otherwise, there's really not much to talk about. To discuss, all right, maybe gold as well. I actually completely forgot about gold yesterday. I'm still long. I haven't changed anything about my position. Even though this is the buy zone, I'm still staying long. For me, it's still a hedge against the financial system, at least for the next few weeks. Until things maybe calm down a bit, I'll continue to stay long here. I went long here in the buy zone at the lower edge, and now we'll just wait and see how things continue to develop. Silver, for me personally, only becomes interesting if we drop down here towards 63 to about 54 US dollars. Then let's move over to the stock markets. DAX is still completely tanking. You can really tell the EU is suffering much more than the US markets. Dow Jones. Okay, yesterday there was a significant sell-off, same as well. NASDAQ has fallen below its support. You have to keep an eye on it. It could become very interesting again. S&P 500, yeah, relatively stable, is holding its next support. So ever since we left the range up here, there's been a massive sell-off. Take profits, guys. Please, for everyone who is still short, like me, we have our short position. Up here was the range. That was the short range. That's where it basically was. Support range, take profits. That's the most important thing right now. If we drop below the 6,533 point mark, or actually we need to set it a bit lower here at 6,510 points, then it's a free fall tower. That's all there is to say about that. Just wait and see. We'll watch what happens. Otherwise, everything here is relatively unchanged. The volatility index is also still at a very, very high level, 23.8. Yeah, it doesn't look bullish. Unfortunately, there's nothing bullish. Let's wait and see if maybe over the weekend some country decides to make peace after all. Honestly, I don't really think so. I still rather believe that ground troops will be deployed somehow. Let's wait and see. Otherwise, I'd say that's it from my side. I wish you all a wonderful weekend. Take care of yourselves. We'll hear from each other again on Sunday for the live stream. I'm looking forward to it. And as I said, enjoy the weekend. Take a little break from the charts. And then we'll talk again on Sunday. Until then, ciao, ciao. And as always, stay creepy.